Well, I think we can move on to another bank, and a bank which has done very well. Yes Bank reported a robust operational performance in the third quarter. Net profits rose 55% on a year-on-year basis. Steady net interest income and improving asset quality. NIMs, by the way, went up some 10 basis points on a quarter-on-quarter basis as well. What's the outlook going forward? Prashant Kumar is Managing Director and CEO at Yes Bank. He's with us. Mr. Kumar, good morning. Great to have you with us here. Prashant this side. So actually, I'll come to the loan growth in just a bit, but I just wanted to start with a NIM question, sir. Sharp improvement on a Q1Q basis, which immediately begets the question whether this is sustainable. There is a fair bit of competition for deposits. How will you manage an upward sort of trajectory for net interest margins, and what are targets going to be like here?
So first thing, Prashant, strategically, we were targeting a profitable loan growth. That is first part. Second, we have also taken deep corrective actions on the pricing on the deposit, especially on the saving bank. So our cost of deposit has also come down. And we also got the advantage because of our RIDF deposits are being now coming down. So I think it's a combination of chasing a profitable loan growth, a reduction in the cost of the deposit, and also getting the advantage because of the RIDF deposits coming down.
So where should one anticipate NIMs at? I mean, could you share with us a target, aspiration?
No, we are not targeting, but definitely the current quarter would be tough in terms of recent reduction of 25 basis point. Would definitely bring down the yields on the loan side for the current quarter. And this quarter, there would be definitely a lot of, a fight for the deposit, and this is also the fourth quarter. I don't think we would be able to reduce the cost of deposit for the current quarter. So I think because of this, we would definitely try to retain our margins, and then in the quarter one onwards, the upward journey in terms of improvement on the margin would happen.
All right. Hi, Mr. Kumar. Good morning. Good to see you in. What about in terms of growth? Earlier, I think you all were gunning for close to double-digit growth. This quarter, I think it's been in mid-single digits. What's the outlook in terms of loan growth?
I think if we see the quarter two and quarter three, sequentially, we have been able to achieve a 3% growth. So I think we would be able to have the similar growth or maybe a slightly upwards, maybe towards 3.5% for the quarter four. So by and large, we would be in the position to reach around, say, 8% loan growth for the current financial year. But definitely next year would be a different thing because we are already made some changes in terms of how we are targeting the loan growth, profitable loan growth. We have reduced our cost of deposit. So some of the asset classes where we are not targeting as of now would be definitely part of our strategy for the next financial year.
All right. The ROA has been gradually improving, and you mentioned in the past that you believe that it will continue to improve from here on. Could you help us out with the target? When do you hit that 1% odd mark? And what are the levers you have in store?
I think 1% ROA is something we were sharing, we would be exiting FY26 with a 1% ROA. But if you see the quarter three performance, and if you take out the impact of the gratuity, then we are already 1% ROA for quarter three. So definitely the quarter four, we would be exiting at 1% ROA. And as per our earlier strategy, I think FY27 would be a 1% ROA for the full year.
So just getting back to the point about loan growth, while you have guided for 8% this year, it's still less than 10% that you'd spoken about earlier. So what explains the miss versus earlier expectations, and what are the new portfolio additions that you will do to asset classes that will drive FY27 loan growth, and would that be in double digits?
Well, I think if you see in terms of retail side, especially the prime home loan and the new car loan, the pricing is very, very competitive, and we don't think with this pricing, it makes sense for us to grow on those asset classes. Sometimes just to chase a loan growth, we forget that not only there is a shrinkage of margin, but it would also bring your obligation for the priority sector, depending on what kind of loan growth you do. So I think we have done our maths around this. We would definitely not target these kind of asset classes where yields are so low and there would be obligation for the priority sector, which is also very, very costly affair for the entire banking industry. When we are talking about the next financial year, I think because we have been able to reduce our deposit cost and we would take further actions in the next financial year, I think we would be able to go forward in terms of like affordable car loans, the used car loans, and the business loan.
Sorry, Mr. Kumar, so the areas of focus is passenger vehicle loans and used cars, etc. That's what the focus is, where yields are better?
Yeah, where the yields are better, including the business loan and the personal loans also.
Okay, not the home loans and the other where yields are low and there's too much competition. What about on the gold loan side, sir, Mr. Kumar?
No, absolutely. Gold loan is a very attractive, I would be saying, asset class. Incidentally, we are not there, but definitely this is our part of a strategy. Only thing is like going for the gold loan, first you need to prepare yourself in terms of how you would operate, in terms of security, safety, and the operational part. But definitely this is part of our strategy going forward.
Yields are also attractive. So this is FY27. We will see this getting rolled out across branches?
Yeah. We will be planning for that.
All right. Talking about FY27, sir, what about your tenure as the head of the bank? I think it ends in April 2026. Any further update with regard to an extension? Leadership is something that the market as well will be looking forward to very, very closely. So what's the latest?
No, I think board is moving forward in terms of succession planning. And I think once there would be a clarity, we would be definitely share with all of you.
Okay. Well, I think, the bank's done very well under your leadership. As you said, ROA is almost 1% now. I really appreciate you joining us here on CNBC-TV18. Thank you very much.